Welcome to another deep dive. We're here to cut through the noise, get straight to what matters. Today, we're putting REC Ltd's Q1 FY26 performance under the microscope. We've waded through the official board meeting papers, the unaudited results, both standalone and consolidated for the quarter ending June 30th, 2025, and, all those annexures and auditor reviews, too.
Yeah, and our goal here is really to boil all that down for you. We want to pull out the key insights, help you understand what the numbers really mean for REC Ltd. They're a huge player in India's power and infrastructure finance, right?
Right.
And also what it signals for the sectors they back. So get ready for some hopefully interesting facts and a quick, solid understanding.
Okay, so the market's been watching financials like REC closely. Did they just hold steady or did they actually, accelerate? Let's kick off with those headline figures. Revenue, profit for Q1 FY26, what did we see?
Well, what's really striking is the growth, especially at their scale. The company reported a standalone net profit of 4,451.02 crores. That's 4,451.02 crores. That's 4,451.02 crores for Q1 FY26. And this isn't just a small increase. It's pretty significant year-over-year growth, up from about 3,442 crores in Q1 last year.
Right, 3,442.45 crores.
Exactly. And even a solid bump up from the previous quarter, Q4 FY25, which was around 4,236 crores.
4,236.20 crores. So steady upward movement.
Yeah, that sustained trajectory is what's really noteworthy here.
Definitely a strong signal. And the total revenue, how did that look for the quarter?
Also strong. Total standalone revenue from operations, it hit 14,646.42 crores. 14,646.42 crores in Q1. Again, up nicely from Q1 last year, which was 13,023 crores, roughly.
Okay, 13,023.31 crores.
And the main driver here, overwhelmingly, is interest income from their loan assets. That came in at 14,192.33 crores this quarter. It really underlines, the health and growth of their core lending business.
So those are the big numbers. What does this actually mean for you, the shareholder?
Right. Good question. It comes down to shareholder value, profitability per share. So the basic and diluted EPS earnings per share for Q1 FY26 stood at 16 rupees 90 paise. 16.90, that's standalone. Now, to give you some context, that's a clear step up from 13 rupees 7 paise, 13.07 in Q1 FY25.
Okay.
And also up from 15.96 in the last quarter, Q4 FY25. So, this puts REC's profitability per share quite comfortably ahead of many peers in the PSU finance space. Shows good efficiency.
The top line and shareholder value metrics sound pretty compelling. But, for a finance company, those numbers rely heavily on the underlying assets. So that takes us right into the heart of REC's business, the loan book, and, crucially, how they're managing risk. What's the status there?
Yeah, absolutely critical. Well, the loan book itself, it kept growing, quite impressively, actually. Total loan assets reached 584,567.79 crores, 584,567.79 crores as of June 30th, 2025.
Wow.
Yeah, and that's up from about 566,883 crores at the end of March.
566,883.29 crores.
Okay. So it shows continued pretty robust demand for their financing, particularly for those big power and infra projects across India. Key stuff for national development.
Right. And with that growth, the number one thing for investors is always asset quality. How are they managing potential bad loans? What's the story with NPAs or stressed assets?
Okay, this is where we see some really significant positive movement this quarter. A major plus, their asset quality markedly improved. The impairment loss allowance, that's basically the money they set aside for potential loan losses, right?
Or the provision.
Exactly. That actually decreased. It came down to 9,781.69 crores, 9,781.69 crores at the end of June. That's down from nearly 10,800 crores at the end of March.
10,795.76 crores. So less provisioning needed.
Yes, which is a very good sign. It suggests they're anticipating fewer defaults, frees up capital. And looking wider, the gross credit impaired assets ratio, sometimes called gross NPAs, dropped quite a bit, down to 1.05% in Q1.
That's quite low. What was it before?
Well, compare that to 2.61% just a year ago in Q1 FY25. Big drop.
Huge improvement.
And similarly, the net credit impaired assets ratio, that's after provisions, improved significantly too, down to 0.24% from 0.24%. From 0.82% in Q1 last year. So this isn't just like a minor tweak. It really points to a de-risking of their balance sheet. Better project health, maybe?
That is a dramatic improvement. Does the report give any clues on whether this is, sustainable? Or was it helped by any specific big resolutions this quarter?
That's a really good question. While it does suggest better lending practices overall, there was a specific case that helped this quarter. One stressed asset, TRN Energy Private Limited, they had an outstanding loan of about 1,504 crores, 1,504.07 crores that was restructured successfully under the RBI framework.
Okay.
And this involved writing off 392 crores, 392 crores. But importantly, there's a corresponding reversal of expected credit loss of 272 crores, 272 crores.
A reversal, meaning they'd previously set aside more than needed.
Exactly. They had anticipated a bigger potential loss on this one than actually happened, so they could release those reserves back. Helps the bottom line directly. It shows they're actively, and it seems effectively, managing these stress situations.
Okay, so robust loan growth, improving asset quality. The next logical thing for an investor is the capital backing all this up. How's REC making sure it has enough financial strength for this expansion and, potential bumps in the road? What's their capital adequacy?
Right. Their capital adequacy ratio, or CRAR, for Q1 stood at a very healthy 23.98%. 23.98%. Now, that's well above the regulatory minimum for NBFCs in India. Gives them a lot of room for future lending. A solid cushion.
Yeah, that's quite strong.
It really is. It's a good differentiator for them in the sector.
And what about just their overall financial muscle, net worth, how they're funding these big operations?
Sure. Standalone net worth, that grew to up to 79,687.6 crores. 79,687.6 crores as of June 30th. Good reserve buildup. Their debt-equity ratio was 6.38 times, 6.38x standalone. And here's what's critical for that expansion we talked about, their funding. Just in this quarter, Q1, REC raised a pretty substantial amount, 25,047.50 crores, 25,047.50 crores.
Wow, 25,000 crores in one quarter.
Yeah, all through private placement of non-convertible debentures, NCDs, across different issues between April and June. The ability to pull in that kind of capital really says something about investor confidence, right?
Definitely impressive. But the crucial follow-up is always, did the money go where they said it would? And how's their track record on paying back debt?
Absolutely key points. And the company confirmed, yes, all funds raised were fully used for the stated purposes. No deviations.
Okay, good.
That transparency matters. And importantly, they reported 0 defaults on repaying any debt securities or borrowings during the period. They met all their debt servicing obligations on time.
Consistency there.
Exactly. That consistency. Plus, they mentioned a security cover of 1.51 times 1.51x for their secured NCDs as of June 30th. It just points to really robust, disciplined financial management.
Okay, so moving beyond the balance sheet numbers, what did this strong quarter actually deliver for shareholders? And did the board make any other big decisions we should know about?
Right. Direct impact for you, the shareholder. The board declared a first interim dividend. It's 4 rupees 60 paise, 4.60 per equity share. That's on a face value of 10 per share for this financial year, 2025-26.
Okay, 4.60 interim.
Dates. Record date is Friday, August 1st, 2025, and the payment should be made on or before August 21st, 2025. It's a clear signal, of their commitment to giving back to shareholders consistently.
And any news on the final dividend for the previous year, FY25?
Yes. They also finalized the record date for that. It's Thursday, August 14th, 2025. That final dividend is 2 rupees 60 paise, 2.60 per share for FY 2024-25. But remember, that one still needs shareholder approval at the upcoming AGM.
Got it. Subject to approval.
Correct.
All right. And any other sort of governance-type decisions that came out?
Yes, a couple of notable things. The board approved appointing Ms. Agarwal S. & Associates as the secretarial auditor. This is for 5 years, starting from this financial year, FY26, right through to FY30. Again, pending shareholder approval. They mentioned this firm has a lot of experience, especially with PSUs.
Okay, new auditor.
Secretarial auditor, yeah. And also, they approved an amendment to REC's internal code of conduct. The one dealing with insider trading rules and fair disclosure just shows an ongoing focus on keeping governance tight and transparent.
Okay, good to know. So just to kind of wrap up the financial picture here, can you quickly summarize REC's main business areas? And what about the role of their subsidiary in these numbers?
Sure. REC operates mainly almost entirely within one big segment,
Yeah.
lending. Lending specifically to the power sector, but also increasingly into logistics and infrastructure. Connecting that back, it just highlights their really specialized, focused role in these critical areas for India's development.
Right. Not too diversified, very focused.
Exactly. And the consolidated results we've been talking about, they naturally include the numbers from their subsidiary, REC Power Development and Consultancy Limited. For this quarter, the subsidiary chipped in about 92 crores, 91.99 crores in revenue, and about 14.7 crores, 14.69 crores in net profit after tax to the consolidated figures. So, a supportive role in the overall success.
Right. So let's try and distill this down for you. What does it all mean? We've seen REC Ltd put up some really impressive net profit growth in Q1 FY26. We saw significant sustained improvement in asset quality, which is huge. They showed robust fundraising power and kept up consistent returns for shareholders. It really does paint a picture, doesn't it, of a financial institution that's operating pretty efficiently and with clear strategic direction.
Absolutely. This deep dive gives you, hopefully, a really powerful snapshot, not just headlines, but into the actual financial health and strategy of an institution that's frankly crucial for India's energy and infrastructure path. The specifics we've covered, the profit figures, those key asset quality ratios, the dividend details, these give you concrete, actionable insights, a much more informed perspective than you'd get otherwise.
Okay, so here's something for you to think about as we wrap up. Given REC Ltd's really central role in financing India's power and infrastructure, which are obviously critical sectors, how might their consistent financial performance, especially this continued focus on cleaning up asset quality and their strong ability to raise funds, how might that actually impact the pace and the direction of India's energy transition? And just overall economic growth in the coming years. What could these strong financial signals from REC potentially tell us about the broader health, the investment climate within those vital sectors they serve? Something to mull over.